Welcome to UCGA Discussion Club. Today we will discuss an interesting topic about board evaluation. Recent events at Naftogaz has shown that professional community, society at large, and even international partners sometimes are a bit surprised by certain decisions by the government, which seem to not fully understand why boards exist, what type of compensation professional experienced board members deserve, and how to evaluate their work, the benefits for the country. This is exactly why we gathered today with very distinguished lineup of panelists. And without any further delay, I would like to introduce first Svein Ruud, joining us from Stockholm. Svein is managing partner at Amrop Executive Search, Sweden, global practice leader for board services with enormous amount of experience behind his belt. His colleague, Viesturs Liegis, who is a managing partner for Amrop Baltics in Ukraine, is joining us from Riga. Has had a lot of experience already with Ukrainian companies in the past few years. Then we have Vladislav Burda, one of the most prominent experts in the field of corporate governance, successful entrepreneur himself. Vlad is the founder and the CEO of Redhead Family Corporation. He is also president of Family Business Network of Ukraine, and gladly for ourselves, he's also a board member at Ukrainian Corporate Governance Academy. And last but not least, Olyana Gordiyenko, joining us in a very stylish Ukrainian Vyshyvanka outfit. Olyana is one of the pioneers of corporate governance among state-owned companies and banks in Ukraine, a very strong advocate of the subject, and she's a chairperson of UkrEximBank at the moment. She joined the board as an independent board member and is responsible for enormous amount of very positive changes at the bank. So, ladies and gentlemen, let's get our discussion going. And perhaps a question that everybody is asking is who needs a board evaluation and why? And Vladislav, you have seen a lot of companies do that, others perhaps reject that. What is your view? Who should be doing and why?
I think, thank you, first of all, Aivaras, for so dramatic presentation of each one. And thank you for such interesting topics that you chose for moderating. I think every company which has a board need evaluation of the board, because this is a safety net for everybody, and it's a transparency for the company. And if the board demands transparency from the owners and CEO in private company, it definitely should demand this transparency from themselves. And they should know, first of all, how every board member is making contribution, and in case if owner or chairman or board decide to have any changes in a boardroom, these changes should be grounded by the evaluation. So evaluation is a very needable tool in case to understand how first of all, how we work. Second, how other people evaluate us, because we could not see some important things which we could add or contribute, which could be added in the evaluation process. And the last one, we should also be transparent as much as we want our managers be transparent.
Svein, is a practice of board evaluation a recent phenomena post, I don't know, financial crisis of 2008 with more accountability, or this has been happening, I don't know, since 14th century in the countries of Scandinavia? How widespread is this practice?
Today it's quite widespread, and all public companies do it once a year here in Sweden, and in I would say in the whole of the western region more or less. but it's quite a recent practice actually, and I think it was, kicked off in the beginning of 2000 after the Enron crisis. Enron was an energy trading company that was not having any good corporate governance at all, and it was a really great scandal in the US. So it was a meltdown on the company, and the accountant firm Arthur Andersen actually also fell at that time. So it was restructured and went into bankruptcy. And sadly enough, even since then, board evaluations appear to have quite little impact actually on the number of and scale of and effects of corporate scandal and economic failures. And probably one reason for their ineffectiveness is that corporate governance have been overly focused on regulatory design and compliance issues, checks and balances of listed companies, and not really adding any strategic value to the certain firm as such. And it's not only about ticking boxes. You need actually to understand the business that the company is working in to be an effective board for that company. It was, I would say, enhanced furthermore after the global financial crisis, as you mentioned, Aivaras, and predominantly independent board was considered essential to serve as a dynamic wedge between the owners, the leadership, and of course the board in the middle, like the spider in the net, you could say. So and on the outside, of course, the investors and the capital market and so on that suffered really much during this time. So I would say anyhow that it is important in corporate governance to actually find the right balance between regulatory demands and compliance on the one hand, and business strategy and operational issues on the other hand in the company. So that has actually enhanced the need for board members in a certain board that they actually can add substantial value to the business and to the guidance of strategic issues and the guidance of actually the CEO and the management team. So a lot of chairs today in Sweden, whom I know, complains quite a lot still about that it's too much about compliance. 70% of our work is actually ticking boxes and securing, that we can actually have the back free from complaints from others. But it allows us too little time for strategic issues. So, and I think actually that board evaluation is actually good to use also to actually understand that and the frustration that can be in the boardroom. So I think hopefully that clarifies something about the history of board evaluations.
Yeah, I agree. And funny you mentioned Enron. One of the greatest documentaries of all time on business matters is The Smartest Guys in the Room. This is how they called themselves and thought themselves of. Highly recommended. That was produced about 10 years ago. Viesturs, why do boards need to be evaluated? Is it external pressure? Why do they need to do that? Why can't they just simply have a meeting, have a glass of wine afterwards, and return back to their normal lives?
I would say having a meeting, having a glass of wine. If this is kind of like decent conversation, decent reflection, that already is some type of evaluation, of board evaluation. Yeah, but in general, I would say the kind of this is in a very big extent the question of hygiene. That like we all are humans. Like from time to time, we have kind of to step back and to reflect either the things are going right direction. But of course, and of course, any chairman have to care that processes and processes are working right way. That there are all the competences in a board and so and so. But touching particularly Ukraine's situation, where this corporate governance practices, corporate governance culture is just emerging, and we see that there are like many new competent boards established in, for example, in the state-owned enterprises. Probably this is the next step in this development process, so that we have established boards. Like, it's time to start to think about the quality of work, and probably this is a good moment to start this practice of the structured approach to board evaluation.
Yeah, thank you. Olyana, you have a fairly young board, and you already have done an evaluation, one of the first among multiple Ukrainian state-owned banks and state-owned companies. What pushed you to do board evaluation? Did you have a specific event that triggered that? Was just overall understanding of necessity? Please share.
Well, there are two answers. What pushed us and who pushed us at the board? What pushed us is what happened at the end of 2019 with the previous chair of the board, who was terminated by the shareholder based on the letter of 5. Under the banking law, some of you may know that there is one of the grounds of terminating an individual member of the board would be by the shareholder based on the submission of a letter of 5 members of the board requesting this termination. We were also first to experience that. After that, I would say this is the trigger which helped me as the chair to persuade the board to do an extensive but also constructive evaluation and really practical self-evaluation. So I would answer, Aivaras, that the chair needs the evaluation most of all, because that helps me in this situation and others to maximize the contribution of each particular member, and also to have an honest and open discussion on what are the expectations, our own expectations, or in terms of our performance. And the board needs it as well, because again, this is an opportunity to get back and understand and discuss and agree on what are our own expectations to our performance, and to make sure that everyone is on board in terms of how we perform and each of us performs, and to ideally avoid letter of 5 in the future, and to also release some sort of a pressure and maybe some sort of negative feelings which could have, despite that we're young, it's only 1.5 years, almost 2, but still you understand when you work on a daily basis and you don't see people, it's mostly on Zoom, you have this certain level of irritation. Some members think that others work more, members are irritated just by, emotionally, etc. So the whole process, it was long and there was some reluctance in the beginning, but eventually it helped to release the pressure and to get on the same page. What do we expect us to do? What are our performance expectations to ourselves? And sometimes even to clarify and, discuss it, debate it, but ultimately get on the same page. And obviously, hopefully the shareholder needs our evaluation, because first, as we know, the capacity of the shareholder ownership function in Ukraine is still maturing. So having our extensive report, which is not a formal tick of the box exercise, but goes into the examples and specific issues, would help hopefully the shareholder to look at it and get to its independent assessment, obviously. But this is a good basis to start from. And, when I came earlier this week to the Ministry of Finance, trying to sort of inspire them to speed up with the issuing the methodology for our evaluation, the deputy minister told me, Olyana, why you keep pushing me to issue this? Do you want to be evaluated? And I said, yes, of course, I want you to evaluate it. And he was surprised, but So yes, everyone needs it, the chair the most, but board as well, shareholder, and ultimately people of Ukraine, but we'll get there, I think.
Yeah, we applaud your courage. Not every chairman wants to see and conduct that evaluation. We will discuss mechanics of board evaluation a bit later, but before that, we all understand that board evaluation is mostly needed perhaps just to understand whether the board is performing, whether there is anything else with regards to management communication can be improved. So I want to ask Svein, I mean, in that sort of in that sense, what is exactly the role of board in achieving superior results by the management? And how to split success? Is it like in football? Whenever there is a victory, it's the team that wins. Whenever there is a loss, it's the coach. Or how do you see this balance?
Yeah, I must just say that I think what Olyana said is music to my ears. I think you are a very good analysis and understanding of the situation, and actually it's the same challenges we see everywhere in many companies and in many countries, of course. But back to your question, Aivaras, I think there is a necessity to have a clear understanding of the roles and responsibilities and prerogatives of the board on the one hand, and the CEO and the management team of the other hand. But if that is not clear, then it's very difficult to actually who created the success and who should be awarded for it, so to say. So clarity on corporate governance is, of course, extremely important. And then I think that clarity should actually take place partly by the regulations and compliance issues and so on, but foremost to have an open dialogue between the different bodies, the owners, the nomination committee, the board as such, the chair, and as well as the CEO and some of the management team members, perhaps, to actually come to a common conclusion of how the roles are divided and who do what and what expectations is on the different stakeholders, so to say, in the context. And without this clarity, it will obviously be difficult for the company to reach its full potential, I think, and that's what it's all about. The board should guide the company to reach its full potential, and of course also take care of the risk management and so on, so that it's not only going in expansion or too high risk level on what they're doing. But and then of course, if you don't have that clarity, it's difficult to actually divide the success between the different bodies governing a company. So
Vlad, we understand how to rate company success, market share, growth, profitability, etc., etc., etc. You, as a perhaps most experienced board member in our country, I mean, how do you see basically KPIs for boards, if any? I mean, does it make sense to set some sort of targets, which are called KPIs or whatever else, for the boards? Please share your experience.
Okay, first of all, let's start from the main task of the family business. What family owner of the family business wants? He wants to keep the business, to keep the control, and to transfer the business to the next generation smoothly. So basically, you could evaluate the board as a tool which helps this smooth transition. If you see the company on the second or the third generation where this smooth transition just happened and board was present, you could definitely say that this board works well. But meanwhile, in between, because it's approximately 25 years between several generations, you also need to evaluate the board, and you should understand the board dynamic, and you should understand who is doing what. And first of all, we should define that almost in all our boards, in family business boards, we have two-level boards. So first level is a owner or family owners, could be 2, 1, or 3 or 4 people, and non-family, non-executive board members, independent, definitely independent board members, and this is one circle. And second circle is CEO and management. So basically, what board wants to achieve is performance, good performance of the CEO and the team of the second level, second circle, achieving the budgets, achieving the everything that needed in a company strategy, and also to have smooth succession for the management, because the same principle as we have succession planning for the owners and for the ownership, we need to have succession planning for the CEO and C executive, top management team. So basically, board overview of the process of preparing these successors, next gens. And if we see that we don't have huge gaps, like for example, suddenly CEO fired himself and resigned, and we don't have anybody else, and this is a really bad work of board, and sometimes it happened, and sometimes you could not predict it. So basically, good board is a board which has a plan of succession for each important key stakeholder in the organization. And this is the main principle of evaluation. For the moment, in the FBN, we have 50 families. 5 years ago, it was no boards, almost one, our company board. And now we have almost 15 boards and 5 is on the way. So basically, we have 40% of the boards in private companies in Ukraine, which is very, very good in our particular community. So what we demand from board member, we demand understanding that, first of all, you should govern and you are responsible, but you have no power. And for people who are former CEO of the organization, it's very difficult to obtain this concept, because we used to have responsibility and power at the same place. And you should understand this concept, and you should live this concept at least several years to accept it and to understand that this is normal to govern, to be responsible and have no power, because all power is in the hands of management. And this is only one possibility how you become a professional and successful, responsible owner, because owner, if it's not executive owner, is also responsible, but have minimum power or almost non-power, except the power of assigning CEO. So it's very interesting concept. It's not yes or no. Yes, we could have like simple evaluation when we have two variables, how good you as a professional, how good you as a team member, and 7 and plus in a 10 scale system is good, and less than 7 is not so good. And then you could, after evaluation, you could work on that. But what is more important, it's not the score, but is particular information, which is number information, non-numeric information, what you considerably could improve, because sometimes you could receive such interesting feedback from the people, which you could never ever receive if you don't have official feedback or evaluation system, which you should establish.
We'll come back on the evaluation, but to finish our discussion on KPIs for the board, Olyana, is it at all possible to set a standard KPIs for the supervisory board?
Again, I mean, Aivaras, I think it's a different name for it, not to confuse with those KPIs which are set for the management. Well, we call it in our dialogue with the other state-owned banks and the shareholder as key priorities or key tasks, let's put it this way. Most of them are non-financial. Most of them are, to control effectively that the management delivers on the financial KPIs. And yeah, but definitely some sort of a benchmarks should exist. But the main one is effective control of the management performance of both strategies. In our case, it's a general bank strategy and NPLs work with the non-performing loan strategy. So that's the main, sort of key task. Then you can obviously split it into sort of a more detailed if the shareholder knows how to do that. But it's important or better that these key priorities or tasks are identified in the beginning of the year, so that the board, at least by the middle of the year, okay, we can compromise. But we want to know them before the end of the year so that we can sort of somehow try to manage. And unfortunately, the methodology for us is almost ready, but how to define these key tasks or key priorities is still a question. You know, we'll see how it works in practice, but they would help, I guess. But again.
Thank you. And Vlad brought up an interesting case. How many family-run, family-owned companies have started boards in Ukraine? And we are here also posing questions that were raised by our audience, our UCGA alumni community. And one of the typical questions like, okay, who needs a board? And to myself, I came to a conclusion after many years that whoever takes in other people's money, private equity funds, venture capital funds, obviously publicly listed companies, and obviously state-owned companies of certain size need to have all of those boards. But once we have these family companies in place with boards, state-owned companies, I guess a lot of people, including our audience, wants to know, so what is the fair level of compensation to those board members? So I would like Viesturs first say his view, because there is a lot of discussion in society in Ukraine about the level of compensation, and then Vlad to add to this discussion because he has very firm views of how much company has to spend on the board. So let's talk about money, Viesturs, please.
Yes, that's a very important question, yeah, because we witness this as well very often. We are approached by media, by journalists asking, so that either what is the practice and why board members in Ukraine, they are earning so much and so. But what I would like to say is that no, in general, there is no general global practice when it comes to board remuneration. There is kind of like a clear consensus that like board member hour is as much expensive as a top executive hour, and the specifics of Ukraine, of course, is that like when we are talking about like established market, established company, which has like 4, maybe 6 board meetings annually, it's a one situation. But of course, in Ukraine, when you have a corporate governance system just under the establishment, and like talking about the states again, states-owned enterprises, all of top enterprises there are either like practically in a situation of the crisis or in a situation of major restructuring, and of course board is very much involved in these processes, yeah, because the executives, the management has to be in charge about the daily business, but somebody have to take care about that as well. So
huge challenges, huge reputational risks, lots of criminal cases against you.
Exactly.
The case with PrivatBank board suggests,
exactly.
And all of that needs to be compensated. More time spent
exactly.
initially promised and so on. Vlad, what is the situation in the private sector? Certainly less risks.
So before jumping to the numbers, I just want to add to your words, Aivaras, when you said that your concept is that any company which use other people's money should have a board. I could say that in a family business, we have a concept that we are taking credit from our children. I mean, taking an enterprise from our children and should deliver it to our children after our career. So basically, this is the reason why all family businesses also should have a board. And now going to the money issue. Several aspects. Aspect number one is the amount of money. I think that it's reasonable if we are speaking about private enterprise, which is not non-profit, which is for-profit organizations, that owners of the company and family owners share some money, some profit, some capital with the board members in terms of salary. So each board member in a for-profit enterprise should receive a salary. They should not do it for free. You could do it for free for UCGA, for FBN, for other non-profit organizations, but not for-profit organization. It's a first concept. Second concept about amount of money. So basically, I always give the owner who wants to start a board the general picture that it's okay to spend on board from 1 to 1.5% of the profit of the organization.
Profit or revenue? Profit.
No, profit, no revenue. Of course, profit. Profit. Basically, it means that it's not a big debt, I mean, not big burden for the company. And second, it also means that, for example, if you spend more than 10% of the board, maybe you're not ready to such expensive board, or maybe you should leverage on your board knowledge and board level to increase your profitability to reach this 1.5%. If you transfer this 1.5% to the real money, you could easily calculate that, for example, for the company with 10 million in profits, it's approximately 150,000 in a year compensation for the board members, for the whole team. Next aspect is, and basically, so what is going on is that we as a board member, we could start, for example, from the higher salary because each board member has his own standard of salary, but in the end, we should achieve this 1.5% as a team. But the next concept is, should this percentage should be fixed or should be variable? And of course, if you are helping the entrepreneurial model of the owner as a CEO or the non-family CEO, it's better to have entrepreneurial model for the fees for the board members. And for example, when we speak about the first year, we're always speaking about fixed salary. But when we are speaking about second year, I always propose to the owner to see on the opportunity to make a reward to the board members like a 10% of the gain in profitability year to year. So basically, if you have 10 million year and next year you have 11 million year, so you could split 100,000, which is 10% of this gap among board members who contributed to this profitability. This is the second aspect. The third aspect is to be or not to be shareholder of the organization. Many American companies, they provide shareholder options. In Ukrainian family business, I object this approach. I think it's a way how to become non-independent board member, and you could have a lot of creative ways how to compensate without being a shareholder of the organization, not having conflict of interest.
Yeah, excellent. This is actually, now that you bring up other incentives except for fixed pay, I think this is very interesting. A couple of weeks ago, Lithuanian energy state-owned company called Ignitis, which recently listed on the exchange with 3.5 billion euro valuation, board approved the option scheme for the management, and it was a big political scandal. Eventually, all those awarded stock options had to forgo them because it was not accepted by politicians, unfortunately, who are, as we know, quite often in all countries, developed and less developed, are the main obstacles, on the way for the better governance of state-owned companies and sometimes even private companies. But Svein, Scandinavia is always ahead of the curve in terms of share option schemes, phantom options, convertibles, whatever. What have you seen in your experience in terms of, compensating board members?
Yeah, I must say in Sweden, the remuneration is mostly fixed yearly fee. And the board members get one amount, and many times the chair get the double or even more than that, depending on what kind of company it is, the size of the board, and the challenges for that specific company. In private equity-backed companies, you can, of course, see a different ball game where the chair and board members can actually invest on the same terms and conditions as the management team or the the private equity fund per se. And I think also in the startup market, which is quite active here in Sweden, we have a lot of unicorns that have developed. And when they started, of course, they didn't pay fixed high salaries to the board members. They could give them some stocks, and that has probably been a better business than just getting 40,000 euros per year as a board member. So it differs, but the main road, I would say, in Sweden for publicly listed companies, that's the fixed part, because that, as you underlined, also gives you the independence, actually, so that you're not too linked to taking risks or so, because then I can get that bonus or that part. You should also be a control organism over the company.
Makes sense. Olyana, just to round up discussion about money, you have first-hand experience at UkrEximBank. Maybe you want to share your view on this.
Yeah, really quickly, because I'm mindful of the time. Let me say a couple of principles. First, whatever it costs, you need to pay. I mean, it depends on what kind of board members you need and what kind of contribution and dedication you want from them. I agree with Vlad that pro bono has its sort of consequences in terms of dedication of time. So, whatever in our case, the shareholder thinks he needs from his board and what quality and type and caliber of the members he needs, then that's the answer to the question. So it's very circumstantial. What is also important that you can't change the rules of the game during the term of the contract, like the 47K situation, as all of us know. Now the parliament is considering another cap, which is 72, much bigger than 47, but again, it may lead to certain consequences. Not that we're all there for money, we are not. And most of the board survived the 47K restriction on the pay to prove that we are not for money. But, the dedication to Ukraine and, of people who can easily earn this or bigger money somewhere else, time permitting, this has obviously also sort of certain restrictions. So I would not rely on dedication and national spirit and everything for a long time. The entrepreneurial structure, which Vlad was suggesting, is a very nice idea. For some reason, the regulator, the NBU, and the shareholder in Ukraine think that it's not a good practice to reward the supervisory board on an entrepreneurial basis, which would be interesting to discuss among the panel. But yeah, I mean, I don't disagree. This can also be an option, and this motivates, but potentially, needs to be discussed on how it will work with respect to specific Ukrainian companies and long-term objectives. That's it.
Yeah, when it comes to SOEs, I always say, and compensations, I always say that we are too poor to pay low salaries. We have done that for 25 years, and look where we are. What INSEAD, our partner, also suggests is that 1 day of a board member compensation, as a rule of thumb, may equal 1 day of compensation of the CEO, and then you multiply by the days of the engagement. So now we are ready to discuss the mechanics and the specifics of board evaluation as such. Perhaps we start with Viesturs. Viesturs, tell us from your experience, who conducts board evaluation? Is it relatives of a chairperson? Is it internal resources at the organization, or is it Amrop who does board evaluation?
in very big lines, of course, the like very basic work can be done by chairman and by board themselves, and it of course it requires like certain knowledge and certain methodology, but I would say that you can cover like 50 or 60 or 70% of problem yourself. But of course, if you want to have a much more comprehensive result and much more comprehensive understanding, you have to like attract some kind of like consultant. Other thing, of course, is if the evaluation is requested by some kind of regulator, like for banks in Ukraine. Of course, this is a national bank who has developed its methodology, and then kind of like this is a quite big pile of papers have to be filled, and then there should be somebody who can do that work as well. And I know that in many such cases, in many such organizations, like people who are in charge about the compliance management, they are dealing with this, or legal people. But in general, we can talk about self-evaluation or attracting the consultant, and then it very much depends what is your expectation, so how deep you want to go and what is your objective.
Yeah, I will touch base on that. So Svein, two types of evaluations have been discussed here: internal resources and external. What are the best practices in the countries that you cover from years of experience?
Yeah, I think it's over time developed actually from the beginning, and the regulations and compliance rules state that once a year publicly listed companies should do a self-evaluation. So that's an option, of course, but over time it's been more regular that you actually hire in somebody from external to do it, because it seems to be more professional, and it's not only a tick in the box exercise that the chair put in the drawer and doesn't look that much at. So that is, creating more seriousness of the whole activity. And when it comes to kind of different companies and so on, I can say that, of course, the most comprehensive board evaluation is in the business of Olyana, the financial institutions, because underlining also what you said from the beginning, Aivaras, taking care of others' money needs even more and better proper governance. So if you have a lot of savings and so on for corporations and private people, then of course you need to take really good care of those, and that creates actually the need for very strong, good corporate governance. Of course, in more developed countries, Western economies, Europe and the US, I think that has created even more demands on board evaluation, and the recommendation nowadays is that you do it mostly by external resources, but on a cycle of 3-4 years or so, you could do it one time by yourself if you have a good tool to work with. But I think the added value of using external resources is actually exceeding that of doing it quick and not dirty, but very quick and not really followed up. Strangely to note actually is that I read about in different countries how common it is, and if you think about Switzerland, you think they should do it, all of them, by the book. And as late as in 2015, only 5% of major companies did an external board evaluation, because the option has been to do self-evaluation. And that is actually, not really a high score for Switzerland in that sense. So we have discussed that a little with our managing partner in Switzerland as well, Freddie Hausemann. And it's not that easy actually to sell this product, because they want to do it themselves. And the chair don't want to like to be evaluated by somebody else.
I can imagine. As a chair, I also not always want to be evaluated, but I'm forced to in the case of UCGA. But Vlad, I mean, entrepreneurs, those that run family business are typically more demanding towards the board, higher expectations perhaps that board members contribute. What are the typical ways that you have seen in family business in terms of board evaluation? Thank you.
First of all, I want to say that we have a wonderful company with name UCGA, which is teaching us about how to evaluate the boards. And you are giving tools, if you remember these wonderful cards of Ruud, on the top of the card is exploit, which means the highest achievement.
Their process leadership.
Yes, absolutely. And you could use these cards as a self-evaluation, and we are doing it on every board in the ending circle and last feedback. And this is a very good tool, and I like it very much. The only one problem of this tool that this tool is not solving the issue if you really not satisfied with one board member, you could not do it internally, because this ending circle is not about giving feedback to a particular board member whom you're not satisfied. So for this particular situation, and you must understand that family business owners, they're very quick in jumping to conclusions, and they're very quick to shoot from the hip. And if he doesn't like or she doesn't like somebody, immediately acts. So the main issue is to withhold them from action, to withhold them from firing people just because they don't want what they say during the board meeting. And the evaluation of the external part is the only one defense of the dignity of the person who is serving of the board from the decision of owner to dismiss him immediately. And if you remember, Ruud also said that the shareholder has the ultimate power in the board, and if he or she executes this ultimate power, it could be really tragic for the board dynamic. And I particularly was in such a situation, which maybe we will tell later. But I also want to say that it was not a lot of organizations which provide this services, and I recognized only because of the evaluation of UCGA about Amrop, who did their job very well, but it's very new. So the boards is a quite new concept in Ukraine, and the company which evaluates the board, it's even more new concept. So it should take time to deliver these two new concepts and bring them together.
Yeah. I just want to add that UCGA has done it twice using external sources. So both Amrop this year and another firm that did the same job for us a year before. So far, mechanics did not involve individual interviews. It was a questionnaire, very detailed, tailored towards us, and we'll discuss later what type of conclusions we drew from that exercise. But Olyana, you have done it yourself at UkrExim. Not theory, in practice. How did you do it? Did you hire someone? Did you do it in some other way? And as we move to discuss the process, perhaps you could share your views in terms of when do you expect the next board evaluation to take place?
Thanks. As I mentioned, there was a reluctance at the level of the board regarding why do we need the evaluation, whether the results will be leaked or can be leaked intentionally or not intentionally, and so how honest we can be, let's do it formally, etc. This reluctance and fears and concerns, together with the consideration of the costs, because we were doing it during the quarantine period and started when the 47K was still in place. So, having a cap on our remuneration, but hiring sort of not terribly expensive, but still a consultant whom you need to pay, seemed illogical. And because of the reluctance and fears and concerns, we thought that it would be very difficult in terms of the level of the trust to hire an external consultant to do that for us. That's why we used probably sort of something not unique but unusual. We had the facilitator, who is our trusted legal advisor. We have been working with them for a long time already, and each member of the board has certain level of trust in these guys. So they were facilitating, meaning where we saw, well, first we developed a questionnaire for a long time, and where we were stuck in terms of, keeping a question which requires an honest answer, then we would sort of split up, and the consultants would have separate conversations with different board members or the group of the board members. When we finalized the questionnaire and when we received the answers, what we received, sometimes we understood that there are technical misunderstandings of the answers and questions, and therefore some answers are irrelevant or are answering a different question. On this one, we also asked the trusted legal advisor to do the facilitation, because I didn't felt myself comfortable calling my colleagues and telling them, you made a mistake, you misunderstood the question, or are you sure you are not aware that we approved this regulation half a year ago, or something like that. So, we used their help to facilitate, but yes, we've done it internally, and I think that was the only way to achieve what we achieved: an honest discussion and a constructive sort of outcome. Next evaluation we will be doing starting from autumn this year, and we'll see at that stage whether or not we'll be engaging someone externally. It will depend on the political situation, on the atmosphere in the board, and also on the liquidity of the bank, obviously, because we're not paying it from our pockets. I mean, we need to consider the liquidity of the bank. We hope it will be okay by the end of the year or during autumn, but we'll see. The procedure which the shareholder is developing provides for external expert at the expense of the bank, but for the benefit of the shareholder. So there will be a 3-step process: our self-evaluation, then external expert paid by the bank, but hired for the shareholder, and then the shareholder. So we also don't want to duplicate. And if the shareholder will do the evaluation at least of one of the pillars, which is the corporate governance input by the supervisory board this year, then that would be another consideration to keep doing the self-evaluation internally. I mean, as we did it this year, but we'll see. I mean, it depends.
Yeah, we admire you for sort of saving other people's money, taxpayers' money in this exercise. But Svein, the cost of especially doing it with external resources, does it often scare companies? Again, let's talk about the money. How much do things normally cost?
I think it's not the price tag that is international, in the sense that you get paid the same amount in every country or in every company, so to say. It depends on specific market conditions, how spread this is. If it's widespread in a country, then of course you have more competitors doing it, and that will influence the price. What I can see is that it varies from around 20,000 euros to 80 up to 100,000 euros. And I think an average would be like 45,000 euros. And that includes both use of the tool that has been developed, but also deep interviews with each and every board member. And when you do those interviews, you also get kind of the feedback from each board members towards the other board members, and that's actually very much the added value of doing it that way.
Yeah, makes sense. I mean, if it's a large company, it doesn't sound like a terribly huge cost item, but a necessary exercise as such. Viesturs, if the company already started to do board evaluation, perhaps starting with self-evaluation, external or internal, how often you need to repeat the process? Every quarter, every month, once a year? forget about it and do it after 5 years? I mean, what would you recommend to Olyana, for example?
Recommendation, of course, is to do it on annual base, kind of like when you see some progress in and tendencies. But the best practices of world says that okay, you do it annually, but you look longer perspective, kind of like you use some usually 4 or 5 years cycles of evaluation, so that there is like first evaluation, which probably is a little bit more immersive, which kind of fix the base. The next year you can do a little bit lighter version of evaluation, just seeing so that what kind of like changes are there. Third year you probably already see some substantial results of board work, strategic results, and then fourth year when kind of like there is the conclusion of the cycle, and you again do like this immersive evaluation, so that kind of and so on. So that is the recommendation as well from our side.
Yeah, going further and deeper into the process of evaluation as such, Vlad, what have you seen typically in evaluation? Is it a collective work that is being evaluated? Is it the impact of the board on the results of the company? Is it individual board member performance, separately maybe chair? Or is it the board that evaluates management? I mean, walk us through the process a little bit. Thank you.
Okay. So first of all, as I mentioned before, it is not so much evaluation on the market. So evaluation is more a rare case than usual case. If we are speaking about self-evaluation, we are doing it regularly, and we evaluate basically how was the board meeting, what we could improve, what we should stop, what we should continue, what we should start. And this is evaluation about the whole process, not about the people. Maybe we could evaluate some people who attended the board, like invited speakers, like CEO or management team, but not evaluating each other. If we are speaking about budget, for example, for the family business board, the amount of 20,000 until 80,000, it's almost the amount of the board budget. So it's tremendous amount. It's very expensive. I don't think that many companies could afford that. But I hope that Svein and Viesturs will provide a special product for the family business, which is not achieved the size of the huge governmental corporation. So basically, this is also one of the reasons why it's not widespread, because this is a job which is expensive. It's not a cheap job. It's like a luxury. It's like a very specific and engineering job. It's not easy. It's not a job that everybody could make it. So basically, if we are speaking about what evaluation should be, yes, it's better to evaluate each member, because this is insurance for the owner in case if he wants to divorce with some board member, or if he wants to fire some board member, to have this more or less objective evaluation, like 360, to show to the board member which is not very strong that maybe it's an opportunity to continue a career in another company. But if he or she doesn't have this evaluation, it's quite more difficult to make a firing procedure. This is a reality of Ukrainian market. We don't have so much external evaluation yet. And UCGA was the first company in my personal career which made this external evaluation.
Interesting. Svein, what would you add to this particular topic? Does the evaluation touch base on committee work, interaction of management and the board, quality of materials prepared, frequency and punctuality, of the meetings, quality of moderation by the chairman? What exactly the evaluation touches upon?
Yeah, in our board evaluation tool, we actually cover 11 areas, and you already mentioned a number of those. And coming into the roles, actually in the board, the chair is of course an area which is deeply investigated, in the sense that there are some statements about the chair, how that person runs the board and direct the word between the different board members and so on, and actually opens up for constructive discussions and debates. So that is certainly, if you avoid that, then you cannot do a proper board evaluation. So, and then of course the committee heads is also evaluated, in the sense that the most important committees like the remuneration committee, audit committee, people and culture committee, or whatever you have there, risk committee in a financial institution, for example, they need to be really investigated, how they function. Are they really adding value to the whole company and to the board work, and aligned with the right or with the corporate governance codes that we do work after? So I think that goes more or less without saying. You need to actually get the grip on the most important parts of the board work. And additionally, also we most often evaluate also partly the CEO and a few of the management team, because they are also mostly invited to actually do the exercise and also be interviewed. So that gives us, as an external consultant in this, very good food for thought, how the CEO and some of the management team, the corporate secretary or the CFO or anybody else, actually also view the board. So I think, but you need, as Olyana also said, it's very important that you dare to do it, that you have the open, ceiling, and dare to discuss very openly in the best interest of that company, because that's what it's all about.
And from your personal experience, what can go wrong prior, during, or right after the board evaluation? Yeah. Someone resigns halfway through the evaluation, half of the board members switch off computers and do not participate in the questionnaire. I mean, maybe some anecdotal examples from your practice.
Yeah, I cannot say that I have seen any of those failures in that sense when we have been executing board evaluations here in Sweden. But typically, if the chair is reluctant, then of course it will be giving less value. If there are influential board members that feel uncomfortable, then that will also be an obstacle, of course. And of course, if the board discipline is low in general, people will not answer the questionnaire, they will not really put aside the time, they're not interested to really get the results. So that is, of course, very, very important. And I think after a board evaluation, if actually the outcome is that the board performance is really low, or the chair or owner representative is not appreciated as persons, then they would probably try to forget the whole thing and put it in the drawer and say that this consultant was really a bad one. So let's continue like we did before. And then to secure that that is not the outcome, I think also in many times the chairperson is actually the client of us in starting a board evaluation. But the nomination committee should absolutely be involved and getting hold of the result of the whole activity, because then they can use that actually to understand this board is dysfunctional, we need to do changes, we need to take out that person and so on. But if the chair or the main owner is the end of the story, then it could be difficult actually to use the result of the board evaluation to make changes.
Olyana, what did you do with the results? I mean, you've conducted self-evaluation, and what were the next steps?
Yeah, the next step, well, not the next step. Well, first of all, reacting to what has been said about, the individual members' evaluation, it was in our case, we didn't concentrate or draw attention of the board members that they are individually evaluated, except for the chair. Obviously, there was a big section on the chair, and everyone enjoyed that, even myself. It was really, I mean, there were some negative comments, but it was useful to dig them out from the members, because otherwise they, keep thinking these things about the authoritative leader, or about me having some external meetings and not reporting to the board, or other things which, they thought. And it was very helpful that they put them on the table, we discuss, and it turned out, well, first on some of them, it turned out that it's a prejudice. On others, we developed we agreed on a constructive way out, or the way we'll handle it in going forward. For example, on the external meetings, whenever I'm visiting the ministry or, other regulator, the board now feels much more comfortable, because I report. I mean, I don't write a sort of report on each meeting, but every supervisory board meeting, I start with highlighting what happened and providing them with the opportunity to ask more questions if they're interested in a particular meeting or call or discussion. So that really, I mean, from the practical step, it really helped. However, when we were filling in the questionnaires and having the discussions, obviously the contribution of each particular member, in addition to the board chair board contribution, was also discussed. I mean, it's inevitable, and that's good. And I think it's easier to do that this way than tell all the board members that we will evaluate each of you, and now we'll have a 360 review. Because, one thing is to have a 360 review with respect to the management board or, lawyers in a law firm. But in the board, usually you have professionals who are not taking it very easy when you tell them that, now you'll be evaluated 360 review by your peers. And in my board, for example, on a funny note, I have like 40 years experience bankers like Dominique, right? And I'm not sure, I mean, we are developing certain level of trust, and we are much better now, but it would be a bit difficult for him to take evaluation from me. I'm much younger, not a banker. So, to mitigate that, I think that was useful that the evaluation of individual members was sort of a consequence of the entire evaluation, and the discussion mostly focusing on the board effectiveness and the board effectiveness of the board cooperation with the management and the role of the supervisory board chair. So those were the focus this year. We may change it next year. In terms of practical steps, sorry, I deviated from the question a bit. On each area for improvement, let's put it this way, we developed a specific action plan to address it, and we'll come back to it during the next evaluation if we survive, obviously, and revisit it, whether it worked or not. And that was very difficult to do. Why? Because it was so painful to go through the evaluation itself. It took long time to agree on the questionnaire, then long time to complete it in the sort of honest and transparent and correct way. When I told them, okay, now we need to decide what we do with the negative or area for improvement, and they said, leave us alone, please. It's almost Christmas. We don't want to deal with this anymore. And I said, yeah, but we better do it ourselves, because if it will just remain, however extensive is the evaluation, it doesn't make sense to spend time on it unless you agree on what you do with the areas for improvement. So that's why we spent additional couple of, and also Aivaras, coming back to having a glass of wine after the meeting. With the evaluation meetings, it's much helpful to start with a glass of wine, and then it's sort of, so the Christmas discussion on the constructive solutions on the areas for improvement, starting with a glass of wine, was helpful.
Yeah. Vlad, what from your experience have you seen as an immediate outcome of board evaluations? Document ends up in a shredder, or some action taken, or please share.
I want to reflect a little bit of what Olyana said, because it's very important with whom you are making this teamwork. Because, for example, if you have no influence in board members, so basically you was invited to the board where you should get acquainted with other people and you are not taking responsibility whom you invite to the board, it could be quite difficult to build in your new values or new methodology or new innovation of evaluation. But what I'm personally doing, because if we spoke about payments, if we spoke about money, we didn't mention that one of the most important criteria of independence is financial independence. So for me, it's very important that each board member in a board fees receive no more than 5% of his annual income. So basically, if you're doing it not for money, and during the COVID time, in companies with a huge crisis, for example, like Multiplex, all of us, we were working without any fees, without any payments, because it was nothing from where to pay. So basically, the question is how to prevent this team from any kind of political games and how to avoid these political games. You should create the team like a forum, because it's not for profit. It should be your lifestyle and you should enjoy this board. So basically, if you're picking to the team people whom you don't like and you need evaluation to get rid of them, it's a bad situation. If you made a good work picking the best people in the board, and every new board, we are lucky to have better and better people and better team. This evaluation you need not for saving yourself from the case and you need to fire somebody, but as Olyana properly said, as what particular things you could improve in your work. And it's more safe. You could even discuss it during the wine degustation, during the dinner in the bar. So basically, it's very, very important to influence the team. And for example, my mistakes when I started boards, that I allow to have two different streams of the board member. For example, we agreed with the owner, so one stream of board member will be from my side and another stream of board members will be from his side. And it was a huge fight because it was a different values, it was a different approach to the board, and finally everybody lost. So basically, now if I invited as a chairman, as a person who is founding the board, I have an agreement with the owner that I invite person and owner is accept this person. And in this particular case, we have minimum risk that you should evaluate somebody to get rid of, because you know whom you hire.
Yeah, excellent. I agree. From my personal experience, when we conducted and completed the UCGA board evaluation, there are a few things that I took out. Obviously, we need to continue improve on participation, on involvement, on moderation of the discussion, quality of the materials, and so on. But number one thing, an aspect, was that I realized that management would like more support from the board for the current operations. And I appreciated that frank discussion, which led to these conclusions, and hopefully we already improved since then. Svein, for those people that are still hesitating to do board evaluation, tell us about the positive outcomes immediately after the board evaluation that helped fire unnecessary people underperforming, or everybody started to hug each other and love more than before. What have you seen in your career?
Yeah, I can take one example we did for a quite big retail company, and it was a very nice board under the leadership of a fantastic chair, very appreciated, but probably they were a little too nice with each other and so on. And the board evaluation actually showed that management wanted more challenge from the board. They wanted more activity, more proactivity, and so on. And that led to actually not firing one of the board members that left, was actually not possible for re-election, and one other has been there for quite many years and was more or less sleeping. So it was possible to get those two out, and then we could get into two new ones. And they wanted really a CEO, an active CEO that had the same speed as the CEO in the company, because that enhances activity and energy in the boardroom. And the other one that they needed desperately was somebody with e-com experience, innovation, digital awareness, and that kind of issues. So we were successful in placing those two, and that was a real strong outcome of the board evaluation.
Yeah. One question that our audience has asked, to what extent results of the board evaluation can be disclosed and with who? Is it something you post immediately on the social media? Is it something that chairman looks at, sees that it didn't go very well for him or her personally, so let's not talk about it, I keep it to myself? Viesturs, from your experience, I mean, is that this is a proprietary information that shall be kept between those that were involved in evaluation or shared more widely?
Of course, as it was already mentioned, the client usually in the board evaluation projects is the chairman, and this is kind of like the result in big extent is the possession of the chairman, so that how he or she will be able to use this result, this information, which is kind of like in report. But of course, there are those formal cases as well. If the evaluation is requested by regulator, then and quite often there are cases that we prepare like two reports, one for the chairman and the second for the regulator. Like for the regulator, definitely this is to comply to all the requirements, and for the chairman, like this is more deep, more specific information with the advice how to improve work of board.
Yeah, well, our discussion is drawing, is coming closer to the end. I want to thank all the participants for very valuable input. It is clear from this discussion that board evaluations do not bite, that these are necessary steps in terms of self-development, in terms of development of corporate governance as such. We discussed that this reminds us of hygiene. You brush teeth every morning and you don't ask if you need to skip one morning or not. It comes from time to time at a cost, which you can reduce by doing it in an innovative way, perhaps internally to start with, but external expertise nevertheless, as the UCGA example shows, has been very valuable as well. And it's a good tool for owners, management, chairpersons to use to continuously improve the dynamics within the board, in relationship to the management, in relationship to all the stakeholders. So with this, I want to thank the participants, and I'm sure we will meet and discuss this very important topic in the future as well. Thank you very much.
Thank you so much.
Thank you. That was a pleasure.
Thank you very much.
Thank you very much. Thank you.
Bye-bye.
Thank you. Bye.